Imagine opening your MetaMask wallet and buying Apple or Tesla stock the same way you buy crypto. No brokerage account, no stock exchange login, just a wallet. That idea might sound futuristic, but MetaMask is now exploring tokenized US stocks. And if this happens, it could turn millions of crypto wallets into global investment platforms. Today, we'll break down what tokenized stocks actually are and why MetaMask may want to bring them into the crypto ecosystem. MetaMask is one of the most widely used crypto wallets in the world. It now has tens of millions of users globally. For years, MetaMask has been the gateway to Ethereum and Web3. People use it to interact with DeFi platforms, NFTs, and blockchain applications. But the wallet could soon connect users to something else. Traditional financial markets. Across the financial industry, a new idea is gaining momentum. It's called tokenization. Tokenization means representing a real-world asset as a digital token on a blockchain. These tokens can represent things like real estate, treasury bonds, funds, or company shares. And now, even stocks may be moving in that direction. A tokenized stock is a digital token that represents a real share in a company. For example, one token might represent one share of Apple or Tesla. The token lives on a blockchain, but the actual stock is usually held by a regulated custodian or financial partner. This structure connects blockchain infrastructure with traditional financial markets. Instead of buying shares through a traditional broker, investors could hold tokenized stocks directly inside a crypto wallet. That idea alone could dramatically expand who can access financial markets, especially for investors outside the United States. There are several reasons this development matters. The first is global access. Many investors around the world struggle to open brokerage accounts. Tokenized stocks could remove some of those barriers. The second advantage is fractional ownership. Blockchain technology makes it easy to divide assets into smaller pieces. Instead of buying a full share, investors could buy small fractions of expensive stocks. This opens markets to a much wider audience. The third advantage is continuous trading. Traditional stock markets close every day. Blockchains operate 24 hours a day, 7 days a week. Tokenized markets could eventually allow investors to trade at any time. Of course, tokenized stocks require a specific type of infrastructure. Behind the scenes, several layers must work together. A blockchain network records the token transactions. A tokenization platform issues the digital asset, and a regulated custodian holds the real underlying shares. MetaMask already controls one key part of that system, the user interface used by millions of Web3 participants. If tokenized equities integrate smoothly into wallets like MetaMask, adoption could accelerate quickly. Crypto wallets could begin to look a lot like global brokerage accounts. However, the regulatory landscape is still evolving. Tokenized stocks sit at the intersection of blockchain innovation and securities law. Regulators want to ensure investor protections remain strong, so platforms offering tokenized equities will likely need proper licensing and compliance frameworks. But despite the regulatory complexity, the broader trend is clear. Tokenization is expanding rapidly across the financial industry. Major institutions are now exploring tokenized assets. This includes real estate, government bonds, private credit, and investment funds. Large financial firms are already experimenting with blockchain infrastructure. Companies like BlackRock, JP Morgan, and Franklin Templeton have all launched tokenized asset initiatives. These developments suggest tokenization is moving from experimentation to real financial infrastructure. Tokenized stocks could become another important step in that transition. They create a bridge between traditional finance and decentralized technology, and they may reshape how people interact with markets. If wallets like MetaMask eventually support tokenized stocks, millions of users could suddenly gain easier access to global investment opportunities. Crypto users could enter traditional markets. Traditional investors could explore blockchain infrastructure. Over time, the distinction between crypto platforms and financial platforms may begin to fade. Wallets may evolve into powerful tools for managing digital assets of all kinds, from cryptocurrencies to real-world financial instruments. Tokenized assets are no longer just a theory. They are becoming part of the financial system. And MetaMask's exploration of tokenized stocks may signal where things are heading next. If you want to understand how tokenization is transforming finance, make sure to subscribe to Tokenized Living, because the shift toward blockchain-based financial infrastructure is only just beginning.